Hey traders, Nick Shaheen looking at CCIV stock. Lucid EV attack on the internal combustion engine is real. Whether they will end up unseating it is unclear. It seems like it. It seems like all the major manufacturers have committed to get off fossil fuels. There's still the chance that they go to a hybrid model of sorts, given that Toyota is pushing a couple other technologies. So yes, the EV seems like it's the default choice for now, but we'll see how they can keep up with production as far as batteries and charging, etc. So that aside, there's a whole bunch of EV companies that are playing the field. I only like three of them for me, personal choice. I like to trade stuff that has an actual profit and loss statement. That doesn't mean the others are wrong. It just means that it's my choice. So the top three that I would invest in are Tesla, Neo, because it's a baby Tesla, and then XPEV was kind of a baby Neo. But all three of them have actual profit and loss statement that I can actually trade using my expertise with the charts. And so far, the charts have not proved us wrong, steered us wrong, especially in this one. I don't have a trade on it. I'm not bearish the company. I'm just not as exuberant as the people who absolutely love it and think it's going to go to $1 million. So exaggerating, of course, but you know more about the company than I do. I know the fact that it's missing the P&L, therefore I don't want to spend time on it, but I do want to help people who are trading the actual ticker, and I have people in my group that are doing it, but not through my write-ups. Okay, so there are a couple things that I want to highlight today that should help people who are in or looking to get into the chart. First of all, kudos that if you're not in it, that you waited this long, because now you're approaching another buyable zone. Why? Because it has served as a base, like right here, for a good rally. They let it go, they made better progress, and then they let it go. And unfortunately now there's a hint of bad news, not necessarily bad news, just a potential bad news. So let me put some drawings, and I'm going to highlight the two things that I'm going to point out here. First of all, this opportunity one that I have looked at since April. So in April they failed miserably. Well, miserably. They failed in a big way because they went to a lower low, and then they recovered it. They tried to burst through, they failed, and made an even lower low than this one. So these are two tough fails. They took their time rounding bottom and then spiking. Why can't they just do things in moderation instead of these whipsaw? But anyway, nevertheless, they finally broke through it. So if I extend it this way, all right, they broke through it, that opportunity thing, and they let it go. They pivoted around it, totally normal. And now they're back below it. So they're still pivoting, there's still time, as long as they hold this one candle of June 1st, the bottom, the base, 20, 1980, 20, whatever, round it down. You don't want to lose that, because then the conversation for this comes back into view. So keep the base, pivot back around this 24, 25 number, and leave the hope alive to break out from this fail. All right, so speaking of which, this one right there, this one dates back to the candle from here, February 23rd. Look at the size. This is a daily candle. Look at that one day. So if you don't know what a doji is, let's learn it. So it's an indecisive candle. It shows that people, the traders at that point in time, that day, didn't know what to do with it. So they had rocket ship to the moon, crash. They opened gap down. So they opened here. They hated it. They loved it. They came back and said, you know what? We have no clue. Let's just close it where it started today, and we'll decide tomorrow. And then the next day they decided to puke it all out. So if I take one line from the bottom, one line from the top, and the stomach, I get these three arrows that I put in. And look at that arrow right here. And the arrow, the bottom arrow, that says opportunity 2. This was opportunity 1. This is opportunity 2. So they failed exactly at that arrow. So that makes sense. That makes the whole region here a tough sell, meaning it's going to be a lot of resistance from that 223 candle, this one. So it has gone on for months, and they're still struggling with the bottom end of that candle. So I should pay attention to that candle and where I start chasing in relation to that candle. So if I don't get long now and I wait and it rallies back into here and then I decide to get long, I should be patient and see what they do with it. Can they take it out, come back and test it for footing? That's idealistically what should happen. Meanwhile, they're battling over opportunity one again and again. It's okay as long as they don't have a setback. So bulls, get cranking and don't lose this candle. So you can swing back up, come back here, struggle a little bit at 828, come back, struggle at 29.8, come back and take it out and get into that candle. And then we can talk about tackling this one and that one and of course that one. So they will need a headline. Hopefully the company will come out and say something about progress. Value, there isn't actual tangible value. So the value of the stock is within the belief. It's kind of like the American money. We believe in the dollar because of our belief in it, not because there's something concrete. Of course, the country makes money. But here, there isn't a P&L to support value. So when it falls, it becomes the bull's belief in the company's future that kicks in and causes people to buy. And that's fine. One thing I don't do in speculative trades like this is double down, especially too close together. I called it speculative. It's not an insult. It's just a definition of a stock that doesn't have current value, because when I buy it, I'm speculating that the future looks rosy. That would be my bullish bet, and I'm allowed to do that because the company promises a whole bunch. So I will give them the benefit of the doubt. Therefore, it is a speculative bet. So when I take, like if I buy shares in Apple and then Apple falls 30% and I double down or I add to it, Apple already has tangible proof positive of income statements that would tell me, okay, I bought it at 30 PE and now it's 20 PE. I'm jumping in to average down. But when there's no PE or price to sales or anything, then I'm just adding to my problem. Because if I bought it and now it's 30% down, nothing has changed. I'm just adding to my problem. So there's a nuance on doubling down. But this is a tough sell. A lot of people don't necessarily have the experience to have gone through a couple of corrections. We haven't had a bearish market in, years. And you're saying, oh, we just had a correction. No, we didn't. We just had one red tick on a weekly basis. So if you don't believe me, let's look at the SPY. By the way, all great stocks will fall if the indices fall. You're saying, look at this drop. I'm saying, hold on. What drop was that? This is a weekly chart for the S&P. One red tick. So this is a reddish week, but it's only one day. What if they correct down to here, which is like an 8% correction? It reversion to the mean. That's it. Reverting to the mean would be like an 8 to 10% correction. Even if they fall 20%, the bulls will still be in charge. What will happen to all the stocks within the market? So you think they'll hold? I doubt it. CCIV, Apple, Google, they will all fall hard. So even though you believe in this one, if the market's correct, nothing's going to hold up. Monday was a bad day. That's today, 7/19. We'll see what happens tomorrow. The Fed is a diminishing return tailwind because they told us they're going to exit the QE process. When? I don't care. That's a different conversation. So keep an open mind. Love the stock, but don't be blind to, oh, I got to add. I don't add to my problem unless I have concrete evidence that something is changing. So it falling to 16 doesn't necessarily mean it's a bottom. It just means it's another test of a floor and a better hold. All right, Nick signing out. I'm agnostic. I mean, I want the stock to succeed. I just would caution, just because of the overall condition of the markets. We have gone so long without any corrections, sustainable corrections. What if we get one? What if we're actually switching to a bearish market? Frothy stocks do not hold up well in bearish markets. What did he say, frothy stocks? By definition, a stock that doesn't have a P&L, its entire stock price is based on future hope. That's the definition of froth. It's not an insult. It's a definition of a stock. All right, Nick signing out.